Hey everybody, Joshua Phillips here at Churchill Mortgage. It is the last day of July. Summer is just trucking along. Well, listen, I'm with the Phillips team here at Churchill Mortgage and sending this out on behalf of myself, my wife Amy, our son Jesse. As I always like to say, if you're working with the Phillips, you're in great hands. We're going to take great care of you. Well, I titled this video "The Dog Days of Mortgage Rates," and that's kind of based on the term "dog days of summer." Where the days just drag on, it's hot and long, and it's just the dog days of summer. Well, that's kind of the way I feel about mortgage rates right now. Boy, we have been in a little bit of a rough ride the last several months, and reality is I am here to give you the real. I know that there's a tendency to want to kind of always hype things up. I saw a loan officer recently with a video. I mean, mortgage rates had improved like 0.1%. He's like, it's a great time. Rates are down, and it's like, well, yes, but, the reality is we're having a rough time. Mortgage rates, they are climbing. And we are right now probably at about the highest point we've been all year. We are clinging to the sixes right now. And who knows what's going to happen in the future. Well, as I always like to point out, we're using mortgage-backed security charts. You know what? Actually, let's jump over here to the 10-year Treasury yield first. So as you'll hear me talk about often, you can look at the 10-year Treasury yield, and that's going to tell you about everything you need to know about mortgage rates. Now here, the higher the yield, the higher mortgage rates are going. Yikes. Now look at that yellow line at the top. It says 52-week high. This is not good. This is not what we want to see. Now this is based a lot on what's happening with the Iran war, what's happening with inflation. As you may have seen a couple days ago, the Fed did make their announcement. They did not change interest rates, but 3 Fed members voted for a rate hike. So if you're thinking about buying this year, you just need to be aware it's very possible rates may be higher before the end of the year. We all want them lower, but there's just no guarantee of that. We'll talk about a silver lining here in a moment. There is a little bit of a silver lining, I think. This other chart is what we call a mortgage-backed security chart. Earlier today, we had a rate alert to lock in the interest rate. So let's go out here to just a 6-month chart. If you followed me at all, we always use this chart right here. This is mortgage-backed securities, and this is Japanese candlesticks. All you need to know to understand this chart is that red is bad and green is good. And the higher the security price, the better mortgage rates are doing. And you can see this year, let's pull all the way back to a 1-year chart. Let's go all the way back. Let's get wild. So mortgage rates were improving all the way through January. It was looking very promising as we were seeing rates really start to dip down, thinking maybe we might even get below 6%. This was in January and the beginning of February. And then the Iran war started. And boy, since then it's been kind of rough. So you can see we've had these kind of waves, and here things go down, then they kind of come back, and then they go down, and they kind of come back, and now we're back at the down. And mortgage-backed security prices are really at about the worst level in a year. So not good news. Now, a little bit of silver lining. I always think there's a silver lining. And if you need to buy a house, you need to buy a house. And I wouldn't let necessarily, for a lot of people, it's like, mortgage rates should not dictate when you move for your family. Obviously, there's more going on in life than just the mortgage rates. It should be determining where you live and enjoy your home. There's always hope in the future for refinancing if rates are high. But one of the silver linings that we've looked at many times in the past is that when rates are high, it does suppress buyers, and that means that home prices are probably not going up. Sellers are sitting there with their house on the market longer, which means maybe you can negotiate better, get a little better deal. I've seen people save $10,000, $20,000, $30,000, get the seller to pay closing costs. So there's some good things about it. I go, yeah, but see, the flip side back in 2020, 2021, when rates were amazing, is home prices were going through the roof, and people were paying $20,000, $30,000, $40,000 above list price to get a house. So you got to understand kind of the weights and balances of things, and that it's not that there are benefits when rates are slowing down the market. It gives you a better time to get a better deal, and you have to keep that in mind, that on the whole you're probably saving more money just because of the slower market and fewer buyers on the market. So, hey, listen, if you're looking to buy a home, we'd love to talk with you, work with you on getting pre-approved, and have that conversation. Let me just point out real quick, just if I can toot our horn just for a moment here. This is one of the sites where we have reviews. You can see here that I have 680 reviews with 4.9 stars. Not bad, but check out Amy. Amy here, 835 reviews with 5.0 stars. That is truly amazing. As I said, if you're working with one of us here as a Phillips at Churchill Mortgage, you are in great hands. They're going to take great care of you, give you great advice, and help you get into a new home. Well, I hope that's beneficial to you. Have a wonderful weekend as we head into August. And, as far as mortgage rates, probably the first thing we need to see is this Iran war end, and see some peace come and oil flow better and gas prices come down. That's what we're hoping for. Hopefully in the near future, maybe we will see rates at least pause going up and maybe come down a little bit. Take care. Bye-bye.